So welcome everyone to our second virtual Westside Association meeting. For those of you who aren't familiar with Westside, we are an organization that assists and encourages the growth of Westside businesses in our community. We typically meet the first Thursday of every month and have a range of different speakers come in. So thank you everyone for joining us today. We're excited to hear from Tammie Clendenning. Typically, we look for our treasurer's report and our chamber report, but since virtual is a little bit different, if John jumps on, we can always have him do something at the end if he has any updates for us. Otherwise, as far as new business, just a reminder that July we will not have a meeting. With it being close to the 4th of July, we always skip our July meeting. Our goal is to resume in person in August, so we will certainly play that by ear depending on how things are going within the community, but our goal would be that we can resume in August with an in-person meeting. Just some virtual housekeeping rules. We'll ask everyone to please mute themselves. We will save some Q&A till the end. So if you have a question, there is a chat feature on the bottom of your screen that you'll be able to see if you just want to message your question, and Patty is going to go ahead and moderate that at the end for any questions. I'm going to introduce Tammie Clendenning. She is the lead economic development specialist for the Wisconsin district of the U.S. Small Business Administration. Tammie is responsible for providing training on SBA's programs and services, including capital access, procurement, and business advising. She enjoys talking to entrepreneurs about the many resources available to them at exhibits and networking events. Tammie is the district office technical representative for the women's business centers in the state and the SCORE liaison. Prior to joining SBA, she held business development and leadership positions in commercial finance. She earned a bachelor's degree in business management and is a small business owner. So Tammie, thank you so much for joining us and for talking to our organization today. I will turn it over to you.
All right. Well, thank you so much. We appreciate the opportunity to talk to your members today. I also do have Lisa Taylor on the line with me from my office. She recently joined our office as an outreach and marketing specialist. And so between the two of us today, we will be handling the content portion of this. At the end of the webinar, we will take any questions and answer those to the best of our ability at this point, knowing that there is still some additional guidance coming out, especially on the forgiveness aspect and some of the other information. But also, I have shared the PowerPoint with Patty, and Patty is free to share that with all of you at the end of the presentation as well. There is a lot of detail in some of the slides just simply because of some of the rules and whatnot that come along with this. So again, we really appreciate you allowing us to come on. And Patty, I think if you want to share your screen with the PowerPoint, and Patty will advance the screens for us as we go. Okay, we'll start with the next slide, please. Thank you so much. So today what we'll talk about is several different programs that the SBA has to offer. Several of them are disaster related, obviously related to the COVID pandemic that's out there. But then we also do have some traditional programs that the SBA has to offer that are good and useful bits of information to know to help the small businesses right now. So whether that's you and your small business, or if you are a service provider or an economic development person who works with small businesses, it's good information to have. So we'll focus on some of the programs that came out with the CARES Act. So that's the Paycheck Protection Program. We also have the Economic Injury Disaster Loan Advance. We have some debt relief that the SBA is offering to small businesses. And then we'll also talk about some of our traditional programs, which includes our Economic Injury Disaster Loan, our traditional SBA loan programs, as well as some of our business technical advising that is available. We will talk a little bit about the PPP forgiveness process as well. Some of it we'll go through pretty quickly because I think that a lot of people probably know some of the basics, but we'll kind of run through that just in case there's any questions. And again, at the end, if there's questions, please do feel free to let us know. But otherwise, like I say, some of it will just kind of flow through because it may be repetitive, and if you have questions, feel free to stop me. Next slide, please. So I'm going to talk first of all about the economic injury disaster loan as well as the advance. The economic injury disaster loan is a direct loan from the federal government. So that is an application that does go directly through the SBA, which is a little bit of a change from our normal SBA programs. The EIDL, as well as our traditional disaster loans, are longstanding programs of the SBA. They've never been used before on a widespread basis. There was basically disaster declarations all throughout the country. So there is applications coming in from all over the place, and it has never been used before for a pandemic or a virus. So again, there has just been a huge influx of applications because all states, all counties are able to utilize this program. The Economic Injury Disaster Loan Portal is again reopened. It was opened, the streamlined portal was opened March 30th after the passing of the CARES Act. Before that time, the traditional economic injury disaster loan application process required a lot of uploading. There was a lengthy application online that had to be completed. But with the passing of the CARES Act, and again, simply because of the magnitude of businesses applying, there's a very streamlined application portal on our website, sba.gov. And basically that application portal looks for basic information on the business, basic information on the ownership, the number of employees, the gross revenue, cost of goods sold, and then there is also a checkbox for the advance. And I'll talk a little bit about that in just a second. But again, that application portal is now reopened for all businesses. It had been open March 30th for all small businesses that are eligible, which includes small businesses, nonprofits, and agribusinesses. But it did close about mid-April just simply because of the huge deluge of applications, a lack of funding. It did reopen early in March for agribusinesses or farming businesses only, and now as of Tuesday of this week, it is open to all businesses again. If you are a business or if you know of a business that has already submitted an application, they do not need to resubmit that. That is a frequent question that we get. It does continue to be processed on a first come, first serve basis. And generally speaking, just to kind of set a timeline, it is not an immediate answer. So generally speaking, the Office of Disaster Assistance, who is the one that works on the disaster loans, they told us to expect about a 4 to 6 week turnaround time for approval. However, I am aware of some businesses here in Wisconsin that are, approaching a good 8 weeks. So just know that if you did submit your application after March 30th and your application number begins with a 3, you are still in process. You should be hearing any time. Again, this is a low interest, long-term loan for small businesses. It is a working capital loan designed to help the small business get through this difficult time. So it can be used for payroll, it can be used for purchasing inventory, it can be used for paying fixed debts. Again, a working capital business to get through this difficult time, to pay bills that could have been paid had the disaster not occurred. Generally speaking, the loan terms are ranging up to 30 years. Interest rates for the EIDL are 3.75 for small businesses, 2.75 for nonprofits, and there is a 1-year deferral for those as well. And as I mentioned, with the passing of the CARES Act, there was another component that was added for the EIDL just simply for this purpose. That is the EIDL advance. That advance is an advance on a loan of up to $10,000. It is based on $1,000 per employee with a maximum of $10,000. Any amount of advance that is received through the EIDL does not need to be repaid. So in essence, it's the grant portion of the EIDL. So let's just say, for example, a business applies for an EIDL. They receive a $50,000 loan. They receive a maximum of $10,000 of advance. That business is only responsible for repaying $40,000. So again, there is a checkbox in that application. The application for the advance and the EIDL are the same. There's a checkbox that needs to be checked, and that will put you into consideration for the advance. And I really want to encourage any business that's going to do this, be sure to check that box. If you don't check that box, you aren't eligible for the advance, and there is no way to go back and redo that. I've already had a couple of Wisconsin businesses call to say, hey, I didn't get the advance, but they didn't check that box, and unfortunately there's no way back. So the advance is kind of the automatically generated part of the system. So based on the number of employees, the advance will just be direct deposited into your bank account while your application, your loan application, continues to process through the loan portal. There may be a few week lag between when you get the advance and when you hear from your loan officer, but do know that you do continue to go through that process. The district offices, so our office, we are really a separate division of the SBA. All IDLs are processed through the Office of Disaster Assistance. So if you're looking for any information or updates, you do need to contact the customer service number that is listed there or the email address. We unfortunately don't have access to their system and therefore can't provide any updates. So that is the EIDL program. It is open. If a business does feel that this would be useful to them, we do suggest they go online to sba.gov and submit the application. It probably takes about 10 to 15 minutes. So it's a very short, very streamlined application. Next slide, please. I'll also talk a little bit about the SBA debt relief. So as a part of the CARES Act, again, the SBA will be making 6 months worth of payments on any SBA loan. So again, that's any 504, 7(a), or micro loan. We will be paying the payments for principal, interest, and any associated fees. So if you have an existing SBA loan, your lender should already have notified you that you are not required to make any payments during that 6-month period. A borrower may continue to make principal payments should they desire, but there is no obligation to do so. And if an SBA loan is currently on deferral, then the 6 months worth of payments will happen after that deferral period. And just to talk a little bit about what those programs are, the 504 is one of our traditional loan programs. That is a long-term fixed asset financing tool that is designed to purchase a building, to renovate a building, to buy large equipment. Again, it does come with a long-term fixed rate, and it is a great tool for businesses that are looking to, again, buy a building or add large equipment. Our 7(a) program is kind of our traditional program, if you will. It is kind of a general purpose loan. Underneath that 7(a), there are several offshoot programs, including exporting, international trade, express programs. There are some contract lines and some other programs as well. But the 7(a) is kind of the main umbrella for that. That can be used for buying a building, or excuse me, buying a business, starting a business, working capital, buying equipment, really just about any need that a business might have. Great tool. The loan maximums on that go up to $5 million. Typical repayment on a 7(a) term, for example, for working capital would be 10 years. So again, it's a nice long repayment term, so it helps keep that payment low to help fund any growth that the business or any needs that the business has. Great tool to use. We also have our micro loan program. That is a small loan program that goes up to $50,000. Typical repayment terms on that are up to 6 years. And again, same general purposes for buying equipment, for working capital, buying a business, starting a business. You can access the list of lenders that do any of these loan products on our website, and that's sba.gov/WI. And again, that'll list all the Wisconsin lenders, although keeping in mind most lenders throughout Wisconsin are SBA lenders. Now, a really cool part of this as well is that is for current borrowers, but if a business takes out a new 504-7A or microloan between now and September 27th, they are also eligible to have 6 months worth of payments made. So if you are a business that's expanding, or perhaps one of the two disaster loan products aren't an appropriate fit for your business, if you do apply for a new loan and it is approved, closed, and funded before September 27th, you will also be eligible to have 6 months worth of payments made. And I had mentioned before some of the offshoot programs under the 7A program. One in particular is our SBA Express loan. That is typically a loan that goes up to $350,000. There was just a change made, and that has extended now up to $1 million through the end of the year. The nice part about the Express loan is that it's a little bit of a faster moving loan than kind of the traditional products. The application process still goes through a local lender, and they make the decision locally on the approval for that. In addition, they can use their own paperwork, so it goes through a little bit quicker than some of the traditional SBA loans. In addition, there has been a change for the fees, and for any veterans, veteran spouse, service disabled vet, any veteran affiliated family member is eligible now to have the upfront guarantee fee waived for SBA Express loans. That is a permanent waiver of that fee. The traditional SBA loans work a little bit different, and actually you can go to the next slide if you don't mind. The traditional SBA loans work a little bit differently than some of the disaster products, like in particular the PPP. The PPP does not require a personal guarantee or collateral. However, traditional SBA loans do require personal guarantees, and they do require collateral if any is available. But also keep in mind that that an SBA loan will not be turned down simply for lack of collateral. However, if there is collateral available, the lender is obligated to collateralize the loan as best as possible. Again, you can look at our website, sba.gov/WI, for more information on those programs as well as local lenders. Next slide, please. Now we'll talk a little bit about the Paycheck Protection Program, which of course is all the rage right now. It's all over the media, especially with the changes in some of the funding as well as some of the forgiveness. We'll go through a really quick overview of this. There's been 2 rounds of funding related to the Paycheck Protection Program. The initial program was part of the CARES Act, again, signed into law on March 27th. That application process did open on April 3rd. For general business, sole proprietors and independent contractors were a week later. The funds were exhausted very quickly in just under 2 weeks. And there was 1.6 million loans that were approved. And it's interesting to note that the SBA did process more than 14 years worth of loans in less than 14 days on that initial round of funding. So a huge task that was accomplished. There was then the second round of funding, which was $310 billion that was approved on April 24th. As a part of that, there were set-asides for smaller businesses and smaller lenders to make sure that those businesses were reached. That application process did reopen on April 27th. That does remain open. There is currently still more than $120 billion available through the PPP. And I think that as the forgiveness portion of that has started to be released, and now that they've had the Paycheck Protection Program Flexibility Act that was put into place, I think that more businesses definitely may want to consider this. But it's really important to note that the application process is only open through June 30th. And that means that the SBA has to approve the loan package before June 30th. And keep in mind, a PPP is applied for directly through a local lender. And so that lender does need a couple of days in order to process things and to get that submitted to the SBA. So if this is something that you as a business owner think would be useful for your business, or if you work with small businesses and this might be useful to them, we would encourage you to put an application in sooner rather than later. And I'll just give you some real quick numbers on these before we move on. So for the PPP loans, so far as of June 12th, there's been about 4.6 million loans done across the country for about $513 billion. In Wisconsin specifically, there's been over 81,000, actually almost 82,000 PPP loans done for about $9.7 billion. And about 94% of the loans that have been done less than $350,000. About 86% are less than $150,000. So quite clearly, some of the smaller borrowers are definitely able to access these funds, and we're very happy with that. The average loan size for a PPP loan right now is about $112,000. In terms of the economic injury disaster loan, I forgot to give some quick stats on that. As of June 12th, throughout the country, there was about 1.3 million loans done, representing about $91 billion. In Wisconsin specifically, EIDL loans have represented about a little over 15,000 loans at $961 million. Advances, so that's the grant portion, there's been about 3.2 million advances across the country, representing about $11 billion. And here in Wisconsin, 43,531 businesses have received an EIDL advance, representing about $152 million. So again, this money is getting out there. Businesses are taking advantage of that, and we're very excited to see that. Next slide, please. Again, keep in mind the Paycheck Protection Program is a loan program to help small businesses to keep their employees on the payroll. From the perspective of the fact that the unemployment system has just been significantly taxed, obviously, with people going on there. This is designed to help keep people on your payroll. It's designed to keep your head count and your compensation levels. In addition, it's also really an assistance for the businesses themselves because it helps to create business continuity. Obviously, as the states continue to reopen and different sectors are reopening, if you can keep those existing employees, it helps you just to mainline back into opening back up again without having to retrain or go through your processes and your procedures and your customers and all that. So again, it's a great way for business continuity during this very difficult time as well. Next slide, please. And again, I'll go through pretty quickly who's eligible and then what the eligible use of funds are. Again, the PPP is open to small businesses that meet the size standard. So if you have 500 employees or less, you are eligible. There are a few industries that allow more than 500 employees, and those are specifically based on their NAICS code. The PPP is also open to 501c3s. It's also open to veterans organizations and tribal concerns, again, with less than 500 employees. What does the Paycheck Protection Program provide? The loan products go up to $10 million, and we'll talk in just a minute about calculating your maximum loan amount. It is an SBA guaranteed loan with a 1% interest rate, which provides up to 24 weeks of eligible expenses. This loan is potentially 100% forgivable, both principal and interest, and we'll go through some of that in a little bit. And again, with some of the changes, originally, at least 75% of the funds had to be used for payroll. With the Paycheck or the PPP Flexibility Act, that has been reduced down to 60% now. So I think it creates a lot more flexibility for the small businesses that take advantage of that. Next slide, please. And again, just some of the basics. To calculate your loan, your maximum loan amount, on our website, sba.gov, there is a document that has how to calculate your maximum loan amount by business type. So whether you're a sole proprietor, an LLC, a partnership, a corporation, it gives very specific details on what can be included, what line you look for on your tax returns and whatnot to help determine that. But basically, the way that the maximum loan amount is calculated is by taking your annual payroll costs divided by 12. So basically your monthly payroll costs, and you are eligible for 2.5 times your average monthly payroll costs. Again, maximum loan amount is $10 million. Initially, there was a 2-year term with a 1% interest rate. With the PPP Flexibility Act, that has now been extended out to a 5-year loan for loans approved after June 5th. For those businesses that had loans before June 5th, you may be eligible to extend that out to 5 years from the 2 years, but that requires both the lender and the borrower to agree to that. Initially, the payments were deferred for 6 months, but there has been some changes to that, and we'll go into that in a little bit more detail in just a moment. And then whatever amount of the loan is not forgiven as a part of the forgiveness process is termed out for the remaining portion of that term. A borrower may only have one loan per applicant. If you have multiple businesses, each business may qualify on their own, but there is only one loan. And we've had a lot of people now that there's been the changes with the Flexibility Act that have said, hey, can I get more money now? Can I get another loan? Unfortunately, it is only one loan. Once your loan is closed, there is no mechanism to get more money from that. So that is an FAQ that we've been getting lately. Again, for the PPP, no personal guarantees are required, nor any collateral, and the loans are 100% guaranteed by the SBA. Next slide, please. And payroll costs that can be included are salary, wages, commission, or similar compensation, tips, payment for vacation or leave, allowance for separation or dismissal, payment for the provision of employee benefits consisting of group health care coverage, including insurance premiums, as well as retirement, payment of state and local taxes assessed on compensation, and for independent contractors or sole proprietors, wage, commissions, income, or net earnings from self-employment or similar compensation. Again, as I mentioned before, now only 60% of the loan proceeds must be used in order to be eligible for forgiveness. And one really nice part of the application process that was just released a couple of weeks ago is that payroll costs must have been either paid or incurred during the monitoring period. So that gives a little bit more flexibility as well. And Lisa will talk a little bit about that as we move into that. But that's really a nice part that's been added into the PPP forgiveness component. Next slide, please. Again, as I mentioned before, up to 40% may be used for non-payroll costs. That includes covered mortgage obligations. However, it is only the interest payment, not any prepayment or principal payment of any mortgage obligation. So again, it's principal or it's mortgage interest. Also, any rent obligations are also eligible. That's for both real or personal property. And then also utility payments are also an acceptable non-payroll cost that's eligible for PPP forgiveness. And again, similar to what I had mentioned before, it is monies that have been both paid and incurred. And again, Lisa will talk about that in just a minute. Next slide, please. Costs that cannot be included as a part of the PPP are any compensation of an employee whose principal place of residence is outside the United States. Certainly you can pay your employees more than $100,000 if that is what their pay has been. However, for purposes of the PPP program, that amount must be reduced down to $100,000 for purposes of the calculations. Federal employment taxes imposed or withheld between February 15th and June 30th now December 31st with the passing of the Flexibility Act, including the employee and employer's share of FICA and Railroad Retirement Act taxes and income taxes required to be withheld from employees. In addition, if you're a business that received credits under the Families First Coronavirus Response Act for qualified sick and family leave wages, those are also not eligible as well. Next slide, please. So I'll talk real quickly about some of the changes that came about. We have mentioned many of these already throughout the presentation, but this was part of the Flexibility Act that came out on the 5th. Again, keeping in mind that we are still waiting for additional guidance, we expect an FAQ document to come out related to the forgiveness aspect sometime this week. So there is still some guidance coming. There are still some unanswered questions that we have. But the act included the fact that the application period still remains June 30th. So again, if you would like to take advantage of this, applications must be in by then. Now borrowers only need to use 60% rather than 75% of the loan proceeds for payroll costs. And the covered period is now 24 weeks. If you were a business, however, that had a loan prior to June 5th, you can keep that 8 weeks. That is your option to do, totally up to you. And any PPP loan that was made after June 5th now has a 5-year term versus the 2-year term that we mentioned before. And if a borrower does elect to go with a longer term, that 5-year term on a loan before June 5th, they just need to go negotiate that between the borrower and the lender. There has also been additional safe harbors that have put in place from the reduction in loan forgiveness regarding the inability to return to previous business levels or rehire or find new employees. Again, initially all employees had to be put back into the payroll by June 30th in order to receive full forgiveness. That has now been extended out to December 31st. In addition, the deferral period for when payments begin on any remaining part of the loan now have changed, and they will not start until the date that the SBA remits the forgiveness amount to the lender, or if the borrower does not ask for forgiveness. There we go. I just lost my screen. Sorry about that. If the borrower does not ask for forgiveness, it's 10 months from the eligible date of forgiveness. So again, it is a 10-month deferral instead of a 6-month deferral, but there is also an extended period for when that deferral starts. Next slide, please. And again, we talked a little bit about this. I'll leave this in here for when the slides are shared with you. But again, the loan will not actually start with repayment until 10 months, either after the SBA has approved your forgiveness and paid the lender, or else 10 months after the 24-week period. And the forgiveness period ends no later than December 31st. Next slide, please. And these are some important bits of information. So you can go to our website, sba.gov or treasury.gov, to get access to these forms. The updated forgiveness application is available, both the forgiveness application as well as the EZ application. And Lisa will talk about that, who can utilize that EZ application. Both of those, as well as the instructions, are available on our websites. There have been several interim final rules that have been put out there related to the PPP, but there is now an interim final rule related to forgiveness as well. As well as other documents. As I mentioned before, we are expecting an FAQ document to come out related specifically to the forgiveness component. I mentioned before too, if you are a borrower that is looking to get a PPP loan, you can utilize the how to calculate loan amount that is on our website, and then all the other documents are referenced there as well. Next slide, please. And at this point, I will turn it over to Lisa. She'll talk a little bit more specifically about the forgiveness process.
Thank you, Tammie. Yeah, I'm going to hit another couple of highlights about the forgiveness process, and then we'll go through a really quick example so that you can see how that easy form works. So to maximize forgiveness, again, you're going to want to make sure that as a business you've maintained or you've regained your FTE, your full-time equivalent employee count. And if you've had to reduce any pay for any employee, you want to make sure that that's been less than 75% of what they've been paid. So as long as they're making within 75% of what they were being paid prior to this pandemic, that helps to maximize your forgiveness. Again, as Tammie mentioned, you don't want to use any more than 40% of the proceeds for eligible non-payroll costs. And then, of course, there's either a 24-week or an 8-week covered period, depending on when your loan was approved. As part of the forgiveness process, a business will be required to provide some documentation. And in the instruction document for each of the forgiveness applications, there is a list of documents that are required to be provided along with the application. And it's going to be things like documenting your payroll, how much you paid to each person, documenting your non-payroll costs. So what did you spend that money on that was non-payroll related? So just being able to show and to document those types of expenses. One thing to note is that as a business, if you're not able to retain your FTE levels or regain your FTE levels, there is still partial forgiveness available on your PPP loan. And likewise, if you've had to reduce an employee's compensation by more than 25%, there is still partial forgiveness available. So next slide, please. So let's kind of take a look at the steps in going through the forgiveness process for the PPP loan. Step one is really just to determine which covered period that you're using, okay? So again, if you were approved prior to June 5th, you can choose an 8-week covered period or a 24-week covered period. Anything approved after June 5th is going to automatically be a 24-week covered period. So if you are a business that has the ability to make that choice, so you were approved before June 5th, it may make sense for you to take your 8 weeks and wrap up your loan process and move on, or it may make sense to go ahead and utilize the 24 weeks, depending on if you were able to use all of your funding, or possibly depending on whether or not you could retain or regain your FTE counts. If you don't already fall into some sort of safe harbor when it comes to number of employees, and we'll talk a little bit about that as well. Next slide, please. So step two is going to be able to choose the correct PPP forgiveness application form. And you've got two options. So there is an easy form, and then there is the full forgiveness calculation form, which is the form 3508. We are hoping that with the Flexibility Act and with all of the new safe harbors that have put into place, and with the extension of being able to use the funds over 24 weeks, we're hoping that the majority of business owners and borrowers can fit into the easy form. And that's because it's just much easier to complete. And so let's take a look at who can utilize that easy form. You must fit into one of three categories, okay? So number one is that the borrower is a self-employed individual, independent contractor, or sole proprietor, and had no employees at the time of the PPP loan application and didn't include any employee salaries other than themselves in the computation for the monthly payroll for the original application. Next slide, please. Or the second scenario is that the borrower didn't reduce any salary or wages for any employee by more than 25% during the PPP covered period as compared to first quarter of this year. And the borrower also did not reduce the number of employees or the average paid hours of employees between January 1st and the end of the PPP covered period. Now, there are some safe harbors that a business owner may fall into that would allow them to check this box and say, yes, I qualify. And that would be reductions that arose from an inability to rehire individuals who had been employees as of February 15th, or if the borrower is unable to hire similarly qualified employees for any positions that remain unfilled on or before December 31st. Also, it is a safe harbor where if the employee offered to bring the, if the borrower offered to bring the employee back on at their full pay and full hours and the employee refused, as long as that's documented, that is also a safe harbor. Next slide, please. Or the third situation that the borrower may qualify for is that once again, they did not have to reduce any compensation by more than 25% during that PPP covered period, and they were also unable to operate during that covered period at the same level of business activity as they were operating at before February 15th. And that inability to get back into normal business activity was due to the guidance and the regulations that were established between March 1 and ongoing through December 31st by places like the Secretary of Health and Human Services, Director of Centers of Disease Control and Prevention, or OSHA, as related to standards of sanitation, social distancing, or any kind of worker or customer safety requirement. So again, that's really reflective of another safe harbor that was brought on when the forgiveness was changed up a little bit with the Flexibility Act. So this represents the third bucket, so to speak, that a borrower may fit into and still be able to use this easy forgiveness form. Next slide, please. So we're going to look at a fictitious business here, just as a way to kind of walk you through this easy form so you can get an idea of what's in it and how to proceed. So we have Steve Goodman. He's a carpenter. He's self-employed, independent contractor, and very often a subcontractor for a number of local residential commercial builders. He is organized as a sole proprietorship, and he has no employees, other than himself. And during the COVID pandemic, he started seeing some business slowdowns. He was not offered the normal contracts through his builder relationships. Their projects were postponed or canceled. So basically, he was experiencing lower business activity, which prompted him to apply for the PPP loan. Next slide, please. So here you'll see the top of page 1 of the forgiveness application form, the easy version. All the calculations are really occurring on page 1 of the form. So the top half, you have some basic information. You have your SBA PPP loan number, the PPP loan number assigned by the lender. You have the loan amount, and in this case, we've got $12,750. The PPP loan disbursement date for this example was May 1st. The number of employees that the business had at the time of original application and at the time of the forgiveness application was 1. It's the owner themselves. And this particular business did apply for the EIDL loan and got an advance of $1,000 because they had 1 employee. And then you're listing the application number on the EIDL loan. Now the payroll schedule in this particular instance, this business owner is paying himself monthly just based on what he has in net profit at the end of the month. So that's the payroll schedule. His covered period, he is going to use an 8-week covered period. So it starts on the date of loan disbursement, which was May 1st, and it continues for 8 weeks through June 25th. Now, he is not eligible to utilize the alternative payroll covered period, and we'll talk about that in the next slide. And then he also did not have a loan of more than $2 million, so he does not need to check that final box there. Next slide, please. So just to define the alternative payroll covered period, because there are going to be a number of businesses that choose to use this. So if you are a borrower that has a biweekly or more frequent, so a biweekly or a weekly payroll schedule, you can elect to use the can elect to calculate eligible payroll costs using the 24-week period, or for loans again that were prior to June 5th, you can choose the 8-week period that begins on the first day of the first pay period following that loan disbursement date. So for example, if the borrower received the loan proceeds on May 1st, but their next pay period doesn't start until Sunday, May 3rd, they can choose to use the first day of their alternative payroll covered period as May 3rd, continue that through 8 weeks to June 27th if they're using an 8-week period. And the reason for that is because if you're calculating payroll costs for forgiveness, it's just a lot easier to start with the first day of a payroll period. So when it comes to payroll costs, this form is allowing you to choose that as the alternative covered period, again, for payroll costs. And in our example, borrower pays himself monthly, so we're not going to use that alternative period. So borrowers who use the alternative covered period do need to use that anytime there's the option to use the covered period or the alternative covered period, which again is payroll costs. And then if, sorry, my screen is doing something odd here. Then if borrowers have a spot in the application where it says use the covered period only, which is generally for non-payroll costs, then they'll use their covered period. Next slide, please. So to finish out the page 1 of the application, which is where all the calculations are, line 1 is the payroll costs, and that is, in our example, $10,200. Line 2 would be the business mortgage interest payments. We've got $69, and that represents 2/12 of the amount that Steve claimed on his 2019 taxes for his home office. It's important to note, especially for the sole proprietors, self-employed that work from home, they need to have claimed these types of business expenses on their 2019 taxes in order to include them in the loan forgiveness calculation. So business lease payments for him would be $1,000 for a tool trailer, and then his utility payments, $326, again, 2/12 of what he had claimed on his taxes last year for utilities. Then we're going to figure out our potential forgiveness amounts. So line 5 is simply to add the previous 4 lines to come up with $11,595. His PPP loan amount, again, the original loan amount was $12,750. And now we're gonna look and see what the amount would be when 60% is utilized for payroll costs. So we'll divide line 1 by 60% to come up with $17,000. Then the forgiveness amount is going to be the smallest of lines 5, 6, 7. So in our example, that's line 5, $11,595. And you'll notice that that's the amount of the loan that he actually used. So his original loan and the proceeds from his loan was $12,750. He only ended up using $11,595. And that's the amount that he would be forgiven, minus $1,000 because he had $1,000 idle advance. So he's got a couple options here. He could choose, once he figures this out, he could choose to go to 24 weeks because maybe he wants to utilize that full $12,750. Or he may say, I'm going to give the difference back, the amount that isn't forgiven, I'm going to give that back to the lender because I don't want to have a loan. So those would be his options at this point in time. Next slide, please. So just a quick note, I don't want to get too far in the weeds, but just a quick note for business owners who are completing this, who are owner employees, self-employed, or general partners. There's going to be some caps on compensation, and there's going to be a few other expenses that won't be allowed. So on compensation, if you're using a 24-week covered period, you are capped at the 2.5-month equivalent of what $100,000 would be, or the 2.5-month equivalent of applicable compensation from the 2019 tax return, whichever is lower. And if you're using an 8-week covered period, you're capped at 8/52 of your 2019 compensation. Up to, again, a max of $15,385, which represents somebody making $100,000 a year. For employer health insurance contributions, if they're made on behalf of a self-employed individual, general partner, or owner employee of an S-Corp, they cannot be added in because such payments are already included in compensation. And then finally, when it comes to employer retirement contributions, made on behalf of a self-employed individual or general partners, you cannot add those in because those payments are already, again, included in compensation. And then contributions on behalf of owner employees are capped at 2.5 months worth of the 2019 contribution amount. Next slide, please. So a couple additional points to consider when you're looking at the forgiveness application. The instruction document for each of the 2 application forms are again going to list the other documentation required to be submitted with the application. There's an important distinction when people are filling out the original application form, they're looking for a head count. So they're looking for 1 employee equals 1 employee, whether they're part-time or full-time. When you're filling out the loan forgiveness form, you're going to start doing some different calculations based on FTEs. And then number 3, eligible payroll costs and non-payroll costs eligible for forgiveness if they were either 1, paid during the covered period, or 2, incurred during the covered period and then paid on the next regular billing date, even if that billing date is after the covered period. So Tammie had alluded to this a little bit, and just a very quick example would be utility payments. So utility payments are paid in arrears. Let's say that you pay a utility payment on week 1 of your covered period, and you're using an 8-week period, and then the next month you pay the bill in the 5th week of that 8-week covered period. But you still have 3 or 4 weeks left in your covered period, and you're not going to see or pay that bill until the following month, which would be after your period ends. So you can do a prorated amount of the incurred utilities and consider that in your forgiveness calculations. So next slide, please. All right, so we've talked a lot about financial loans and programs, and we have a number of different SBA resource partners across the state that are available to answer questions about the EIDL program, available to help you look at that PPP application, forgiveness application. And they're also there to answer other business questions. So we have the SBDC network. They've got 13 offices across the state. And again, they're available for all of that. They provide one-to-one mentoring at no cost. And they also provide classes for business owners. We also have our women's business centers. We have WIBIC across the state. And then in the Independence and Eau Claire area, we have the Western Wisconsin Women's Business Center. You don't need to be a woman to use their services, but they are also there to help small businesses with things like financing. And they also provide a number of online classes for business owners as well. And then you have SCORE. We've got SCORE mentors across the state. They have, in each chapter, they have experts in all different areas of business. So maybe your business is ready to pivot. You know, you're looking to maybe do something else at this point in response to what your clients need right now. And maybe you need some help in revamping your business plan, or you'd like to talk to someone about a different way to market your services. You can talk to a SCORE mentor and get some advice at no cost. And then we have our VBOC, the Veterans Business Outreach Center, and they provide services and resources for the military-connected community who are business owners. So veterans, active duty military, spouses, a family member of somebody in the military. If you are one of those individuals and you own a business, they've got resources for you as well. So next slide, please. And then we would just ask you to keep in touch with us by signing up for updates. There are a number of newsletters going out providing information as it changes on these programs, as well as other webinars that we will be doing to cover these programs. And again, you can go to sba.gov/WI, sign up to get the updates, and also keep in touch with us on Twitter and Facebook and Instagram and LinkedIn. Next slide, please. So if you've got questions for us after this, please feel free to email us at wisconsin@sba.gov. Otherwise, I think we've got some time to take a couple of questions.
Yeah, absolutely. Thank you, ladies, Tammie and Lisa, very much for all of the information. It was a wealth of information for everybody. I'm just going to recap. If anybody does have any questions, please use the chat feature, and Patty is going to go ahead and moderate those questions. Patty, do we have any questions?
I don't see any.
You guys did such a great job. You covered everything. Is there anybody on the call that has any questions? Otherwise, you can go ahead and unmute yourself and just feel free to ask.
This is Will. I have a quick question on the self-employed folks. It seems like going through the calc, given that, you know, those individuals are able to get basically 10 weeks of compensation as a PPP loan. And then on the forgiveness part, 8 weeks worth of their pay can be forgiven, that there's a gap there that, you know, depending upon what their business is, there may be some likelihood that they have some funds that aren't forgiven. Is that a fair, you know, generalized understanding of it, or am I missing something?
That could be the case. If you don't have a lot of non-payroll related costs, then yes, that could be the case.
Okay.
That other kind of half of a month that you were allowed for your original loan amount, that may be taken up and spent on things like, you know, rent or leased equipment or things like that. Now, your other option, of course, is to, rather than just going with the 8 weeks, if you extend that out to 24 weeks in order to be able to utilize the full loan, you have that option as well.
I thought I had seen somewhere in guidance that transportation costs were an eligible use. So is there clarity on what does or doesn't fall in that?
As far as transportation costs?
Yeah.
Yeah. So far, what we have seen is transportation costs includes fuel. So it includes gas.
Okay.
If you have a fleet or something like that, a work truck, that is what we were seeing so far for transportation costs. I don't know if there'll be additional clarity coming up. It would be nice. So we'll see if we get some additional clarity. So far, that's what we're seeing.
Okay. Thank you.
Mm-hmm.
I know we're almost at 1 o'clock. Is there any other questions for either Tammie or Lisa? All right, well, on behalf of Westside Association, thank you very much, ladies, for your time. We do hope everybody joins us for our August meeting. We will meet on August 6th. We are anticipating in person at LaSure's. We will be having Patty Andreessen-Shue from the Chamber and Julie Conrad from the Oshkosh Area School District. They're going to be talking to us about the Oshkosh Area School District, the students, and we'll hopefully get some information on what they're looking to do for the fall. So thank you, everyone.